Hey everyone, thank you for tuning in for our series of videos about multifamily. Today we're going to talk about calculating your net worth. We've got a lot of requests from our listeners and our viewers on YouTube to see if we can do a video about that. So here it is. My name is Joseph Gozlan and I'm with Eureka Business Group. Why do we need to know our net worth, right? So when we are in the phase of wealth accumulation, and most of our are still in there, the next phase is wealth preservation, in case you were wondering. The only real way to measure our progress is looking at our net worth, right? Our bank account balances fluctuate up and down all day long. You get salaries, you get your credit card comes out, it moves around a lot. Real estate value changes as well, not as volatile as our bank account balances, but it does change and it goes up and down, and real estate is cyclic. Our equity position and our loan balances also change over time, right? So if I have a rental property and my tenant is paying down my mortgage, then my principal is going down and my equity is building up. And that is something that is also very important to follow. So my net worth is going to be directly impacted by all of these things. So we really have to kind of have every once in a while take a look at our net worth and understand where we are and what the trend is with our progress. Another reason to have our net worth, and this is really where most people that approach multifamily investing come across this, is that our lenders want to know what is our borrowing strength, right? So they want to know if anything happens, right, and it's a full recourse loan, how much money can they get out of you as a borrower to cover the loan balance, right? And then if you go to anything larger like agency debt, right, from Fannie Mae or Freddie Mac, then they're looking for you as a borrower, as the main loan guarantor, to have a net worth that is equal or greater than the loan amount. So if I'm buying a $10 million property and I need $7 million in loan, the loan guarantors will be expected to have a net worth that is equal or larger than 7 million. So that's also a very important reason to know why we need our net worth. One of the questions I get asked a lot is, well, how often do I need to update the numbers? Well, you need to follow at the minimum I would do is once a month, but you want to know where your numbers are moving on the frequency, right? Are you getting paid bi-weekly? Are you putting money into your IRA or your 401k every month, every week, every other week? Mortgage payments are usually monthly, so you want to follow that. But if you have a mortgage payment that goes out bi-weekly, there might be a reason to look at it more often. If you own a property like an Airbnb or something like this, when people pay weekly, that's a higher frequency that you can look at it. There's really no point in looking at it every day because net worth doesn't move that fast, right? And then understand that there's going to be some guesswork, right? Especially when you need to move the value of your real estate property. We don't get an appraiser every other week. We don't get an appraiser once a month for all of the rental properties. So we're kind of estimating based on where the market is, based on how much we bought it for, based on how much income we get from the tenant. And then if you are doing it on a more frequent base, then I would suggest that you contact either a realtor or friend or someone that is in the industry and ask them to kind of help you evaluate the value of your rental properties, um, so you'll be able to kind of check yourself and your valuation every once in a while. So how do we calculate net worth? What is the formula? Well, the formula is very simple. You get total asset less total liability. That is your net worth. A few examples for assets. What goes into my assets columns is cash that we have in bank account. Doesn't matter if it's your checking, your savings, CDs. If you have account in multiple banks, you just accumulate all of those together. Your retirement account. Some of us have 401ks or IRAs, self-directed IRAs, Roth IRAs, and so on. My public stocks portfolio, right? If you have Apple stock or Amazon stock or whatever other stocks you have, the value of your portfolio. Stocks in private companies. If you are an investor in a company and you got private stock, then usually those companies will issue a annual or semi-annual or even quarterly report, and then you can evaluate what is your stock options worth. Your primary residence, how much does it worth? How much are your rental properties, if you have any, right? So all these things are, if you have them, add them up. If you don't have them, if you're at the beginning of the road, it's okay. Oil and gas mineral rights, right? Oil and gas leases, gold and precious metals, life insurance values, cars, boat, jewelries, your rare stamps collection, your guitar collection. Really, anything that has a significant value can be added into your assets column. And the idea is, if I sell it today, what is it worth? Keep that in mind. On the liability side of the equation, we're looking at everything that I owe other people. Student loans, primary residence mortgage, my home equity line of credit, rental properties that have loans on them or mortgages, all my credit cards debt. If I have a car loan, if I have a personal loan, any debt through my private company holdings, right? So if we talked about, if you have stocks in another company, if that company has debt and you are a general partner or you have enough stocks to have material interest, that debt can come back to you. So you want to make sure that you put that risk, that liability on the sheet as well. And then, like I said earlier, any amount you owe anyone should be on your liability. So let's take a quick look at a personal financial statement for Mr. and Mrs. Smith. Keep in mind that a personal financial statement is a point in time. It's a snapshot, and this one happened on October 30, 2017. When you look at the picture, it tells you the summary of all the accounts that that person has and all the liability that person has, right? So we can see from top to bottom, checking accounts, saving accounts, stocks, bonds, notes, life insurance, personal property, retirement accounts, and so on. And then what is the debt and everything else. And then when you take total liability and you take it out of the total asset, you end up with your net worth, and that's the yellow highlighted number at the bottom of the screen. The second half is basically just the details that sum up to the previous slide that we looked at, right? So the easiest example would be to look at the credit cards at the bottom of the screen. For liability, I have $3,500 in debt in the credit card A, and then $500 in the other credit card. So combined, it's $4,000. And in the previous slide, we only saw one line for $4,000 total debt for credit cards. So this is the summary of your personal financial statement. You need to be able to follow and track your progress, and the net worth is the bottom line, the summary of your personal financial statement. I will link at the bottom of this video in YouTube a link to an example personal financial statement Excel file. You can use it, or you can just go to Google and type personal financial statement, and there is a lot of different Excel files available for free to download and fill it up. I just want to say thank you again for the time that you taken to watch this quick video about net worth calculations, and I hope you understand why we need to calculate that and how it helps us track our progress towards a real wealth accumulation. My name is Joseph Goslan. I'm with Eureka Business Group. My contact details are on the screen. Thank you for taking the time.